Good afternoon, everyone. We're just gonna give it a second for everyone to join. Just a minute or so. All right, let's go ahead and get started. Good afternoon, everyone. Once again, this is Andres, Program Coordinator for NAMBA. I would like to thank you for joining us today and welcome you to today's session on data leverage strategies to optimize lending in today's market. We are so happy to be here today to have our amazing partners. A special thanks to them, our silver sponsors and partners at Zactus for their support and for hosting this session. I also wanted to give you a friendly reminder that we are going to Orlando, Florida in September for a national conference. We expect you to be there. Registration is now open on namba.org and we are looking forward to seeing you there. Without further ado, what we came here for, I would like to welcome today's speakers, Jane House and Jack Borlas. Jane is VP of Data Solutions. She has more than 20 years of experience in the mortgage industry. Jane focuses on providing lead generation, portfolio retention, and risk analysis, reporting data solutions to Zactus customers. In addition, Jane plays a key role in vendor management, ensuring the appropriate fulfillment channels are selected based upon the unique needs of each project. Jack is also a VP of Data Solutions. Since 2002, he has been a strategic and customer-focused sales and marketing executive. Jack draws from many years of experience leveraging credit data and analytics into actionable acquisition, retention, lending strategies for banks, credit unions, and non-bank mortgage lenders. Jack's expertise in mortgage lending includes direct-to-customer strategy development, expertise in credit data use, and FCRA compliance regulation. Please join me in welcoming Jack and Jane. Without further ado, I'll hand the screen over to them.
Thank you. And thank you to the team at NAMBA for allowing us to present today. We really appreciate your time. I'm Jane House, Vice President of Data Solutions here at Zactus. My counterpart, Jack Borlas, and I are going to spend the next half hour reviewing some of the products and tools you can use to protect and grow your business during the market challenges ahead. Just one quick housekeeping note. Over the next half hour, we're going to have the microphones muted. So if you have any questions throughout the presentation, simply note them at the bottom of your screen, and we'll do our best to answer them at the end of the presentation.
Great. Thank you, Jane, and welcome everybody. I'm Jack Borlas, and I kind of want to jump right into it. As you know, the market's changing, a lot of volatility in the marketplace here over the last few months. But in the coming years, the housing market is predicted to be extremely competitive. And we thought it was important to throw up some metrics here with regards to the MBA. So according to the MBA, estimates purchase mortgage originations will continue to grow each year, while total mortgage origination volume begins to decrease. For 2022, the MBA predicts total originations of 2.4 trillion with purchase originations of 1.69 trillion. And for 2023, the MBA predicts total originations of 2.3 trillion with purchase originations of 1.75 trillion. As we make the move to a purchase market, there will be a huge need for filling and monitoring your pipelines. And that's going to be our focus today.
Thanks, Jack. Yes, today we'll be reviewing how you can increase your quality leads and monitor your database for opportunity with the data solutions included in our Leads Finder Plus offering. Specifically, we're going to share how to prevent your borrowers from taking their business elsewhere, how to mine for new opportunities within your existing database, how to uncover meaningful and usable insights from the abundance of data that's out there, how to obtain quality leads and more of them, and lastly, how to understand Community Reinvestment Act strategies. Let's begin by discussing how you can retain the customers you do have with our Leads Finder Plus monitoring solution.
Thank you, Jane. Regarding our Tri-Bureau monitoring product, this is the leading client retention tool in the marketplace today. Tri-Bureau monitoring allows us to send daily notifications to our customers, letting you know within 24 hours that a borrower within your database is shopping for a new purchase mortgage, refinance, or equity loan. Once you have that lead, you can reach out to that borrower to try and recapture them before it's too late. And we'll work closely with you to outline your specific monitoring criteria so you only receive leads you can fund as defined by your specific underwriting guidelines.
Our Tri-Bureau monitoring allows you to access data from all 3 bureaus in one single user-friendly delivery platform. Our data solutions team will guide you through all the necessary bureau compliance and monitoring criteria to ultimately provide up to 50% more data leads than single bureau monitoring. This program is one of the most cost-effective retention programs in the marketplace today. To help you judge the value of this program yourself, we offer a complimentary 30-day look-back report. This will provide stats on how many mortgage inquiries occurred within your contact database over the last 30 days for insight to the volume of prior contacts you could have possibly recaptured.
Receiving mortgage inquiry alerts from all 3 of the bureaus, not just one, can give you a significant edge. While a tri-merge credit report is required for final loan funding, many lenders pull a single bureau to pre-qual and only pull a tri-merge just prior to docs to avoid alerting others to the trigger lead opportunity. Our Tri-Bureau monitoring can give you a heads up to lending activity early in the game, and lenders who monitor their databases using all 3 bureaus versus just one can get 50% more leads. Consider these numbers. At the height of the market, monthly new mortgage inquiry alerts average 1.7% for a single bureau, 2.6% for dual bureau, and 3.2% for a tri-bureau against your client database over a 30-day period. During this current market shift, though, those numbers have been fluctuating a little bit, but it's still a very, very compelling story.
Here's a quick example of bureau stats for 3 of our existing monitoring clients. The lift provided by monitoring more than 1 bureau is undeniable. The more leads delivered through monitoring means more possible loan closings and more value to you. We also offer an ROI calculator to compare the cost of the program to possible new loan funding revenue. Even the most conservative pull-through rates reflect really impressive returns.
Allow us to test your possible results with a complimentary 30-day look-back report. There's no required documentation or obligation. All you have to do is provide a basic input file of your database consumer names and addresses, and from there, we'll provide a report reflecting the number of mortgage alerts you would have received over the last 30 days from either 1, 2, or 3 bureau monitoring.
Let's review some stats on this sample report. In this example, our client was monitoring a database of about 22,000 prior contacts. You can see from the breakdown of how many mortgage inquiries they would have received from each bureau individually, as well as the incremental lift that can be experienced by adding the additional bureaus. The vast difference in activity is a perfect example of how many single bureau pre-quals can occur prior to 3 bureau pull for final funding.
Our Tri-Bureau monitoring platform provides easy access to your data daily deliveries. Updated monitoring files can be loaded to the system immediately to ensure all recent contacts are monitored as well. We typically recommend updates at least quarterly, and we can easily revise your monitoring criteria for any changing guidelines or market conditions. You're not locked into this program beyond a 30-day commitment, but it is important to note clients rarely cancel once they're up and running. Our clients are extremely pleased with the response and pull-through rates they've received, and it's often the strongest ROI of any of their marketing programs.
Perhaps even more important than recapturing your previous borrowers, monitoring can also alert you to possible early payoffs for loans that have been sold in the secondary market. Being alerted to this activity can let you contact the borrower to offer other funding alternatives. Sometimes matching but delaying closing of a consumer's loan offer can allow you to avoid EPO penalties. This is one of the key reasons this product remains the benchmark in the industry with the highest ROI for retention and cross-sell. Firm offers can be avoided if you're only monitoring your own loan servicing portfolio. FCRA will allow this under the permissible purpose of account review, since servicers have a vested interest in the continued credit activities of their borrowers. In addition to mortgage inquiry alerts used for portfolio retention, loan servicing portfolio monitoring can also alert you to derogatory credit triggers to assist in portfolio risk analysis. Being alerted to such items such as late payments and bankruptcy filings can help you mitigate risk before it impacts your portfolio. Single bureau portfolio monitoring pricing depends on loan volume and the selected triggers and appends.
Another lead option that avoids firm offers is our active listing scan. This provides alerts when one of your consumers has listed their home for sale. Active listing scan provides initial alerts and key updates to the property status throughout the sales process. This alerts you to new lending opportunities in the purchase market, since these consumers will most likely need funding for their new home. You can also alert loan officers to possible short sales. Given the typical sales timeline for properties on the market, timely contact with consumers is not as critical as with new mortgage inquiry alerts, giving you more time to work the opportunity. All of these products represent best-in-class monitoring to prevent consumer runoff and maximize retention. Before we jump into pre-screen data, we wanted to call your attention out to the 4 pillars. We all agree that there are many options out there for mortgage marketing: Facebook, Instagram, banners, direct mail, outbound telemarketing, online leads, digital, etc. It's kind of almost overwhelming. But our objective today is to help you learn what the leading mortgage marketing masters have known for years. The single most effective way to drive new business is through direct mail. There's a reason we all get it, and yes, most of us toss it, but needs-based borrowers don't toss the mail. They actually respond. And those responders fuel the fire for inbound call centers that drive new business. There's no secret for these successful lenders. Direct mail is the scalable and predictable discipline for acquiring new business. Our leading clients can also leverage outbound telemarketing as well as email marketing, but mostly for retention efforts with existing customers. And lastly, our not so new frontier, digital marketing, which many of you have heard about. This plays particularly well for large branding efforts across multiple products, demographics, and geographies. Digital marketers have developed new strategies for branding and making offers alongside other initiatives such as direct mail. We thought it was kind of important to call out these 4 pillars as they've become the new standards in mortgage marketing.
Now that we've covered our retention products and the 4 pillars, let's move our focus to acquisition strategy. Our many years of consultative experience in mortgage marketing can provide key insights using pre-screen credit data strategy to fill your pipeline with leads and new business. We have a sophisticated technology platform that allows us to provide on-demand access for count estimates that allow you to be nimble as market change. Mortgage marketers have used pre-screen data for years as the go-to in the industry standard, yielding the highest return on investment. We can accommodate for whatever loan segment is your specialty.
How do we do it? Well, first we start with understanding your loan products, the markets you serve, and your overall underwriting guidelines. We look for core attributes and pre-qualifiers such as FICO credit scores, loan to values, and other needs-based attributes. We have an exhaustive list of attributes to select from, including credit score, LTV, bankruptcies, trade lines, regions, and more. And every loan segment typically requires a unique set of distinct attributes. As experts, we have insight on those attributes that work. It starts with an audience build. That becomes the basis for your go-to market strategy. We seek to lead with the data first. That tells the whole story. From there, you can develop an offer strategy and, as many top lenders do, drop direct mail and get their phones ringing with pre-screened prospects that have an immediate need for loans, but more importantly, meet your underwriting guidelines. When phones ring from pre-screened prospect campaigns, your loan officers will benefit from the highest response and conversion rates in the industry.
Our data solutions team's expertise can help guide you through best industry practices for all marketing campaigns and consumer contact. We'll review FCRA compliance with you to ensure proper adherence to all firm offer guidelines. Firm offers merely state that the consumer is pre-approved based on their pre-screen credit status. Whatever marketing channel you choose, your firm offer will need to be approved by the bureaus prior to campaign rollout. We can offer sample templates for all channels to help you draft your submissions.
There are other data alternatives that also are leveraged in the mortgage marketing industry. These are called ITAs, or invitation to apply, created from public record data that do not require a firm offer of credit. We have access to the largest, most comprehensive data of deed-based information, and we have it on demand. In addition, it's updated every 30 days so our customers can access the most current consumer mortgage information for their marketing purposes. These campaigns prove to be very effective in generating responses for many lenders. However, utilizing pre-screen data ensures that responders are more likely to qualify for your loan offering.
With a focus on diversity, inclusion, and equitable lending, Xactus can help you comply with Community Reinvestment Act requirements. Since the CRA requires certain lenders to serve products to their entire communities, lenders have been hard at work with outreach efforts on many, many levels. Our data strategies help in identifying specific census tracts and low to moderate income households to keep you connected with your entire community. Depending on the data you select, your marketing campaign will point offers to an inclusive universe rather than just a limited group of prospects, keeping you in line with CRA.
Like the pre-screen and ITA that we covered in the earlier part of the presentation, our CRA data strategies will take many attributes into consideration depending upon your offers. We'll focus on the census tract and LMI as a baseline, but also bring in other key mortgage attributes such as equity, origination dates, amounts. If you select credit data, you can also target FICO, debt load, and utilization to identify needs-based borrowers that you may have overlooked previously.
Let me quickly summarize what we've reviewed with a quick recap of today's session and a few key takeaways. Our multiple resources and delivery platforms of bureau and public record data allow you to leverage our best tools to take your marketing programs to the next level. You can set up database retention alerts and be better positioned to hold on to the consumers you already have. You can fill your pipeline with pre-screen prospects as the go-to in the industry standard, yielding the highest return on investment. Our comprehensive pre-screen lead programs utilize multiple databases and numerous attribute selections that produce the greatest number of quality leads, possibly resulting in the strongest pull-through rates available. All of these data solutions are included within LeadsFinder Plus, our product suite that's designed to help you qualify more applicants and capture more loan closings.
Okay, at this time, I'd like to open up the webinar and take any questions you might have. All questions are good questions. So anybody want to open up with any questions?
Jack, I see one here. It's asking, do you sell trigger leads not within our own database?
Okay, great question. So there are really triggers for two purposes, right? When we think about a consumer who's self-selected for a new loan, it's either a consumer that's in your portfolio or not. In our experience, if they're in your portfolio, you have a high degree of retaining that loan. At Xactus, we've decided to not sell the prospect trigger. So today, we do not serve prospect triggers. We serve triggers for the retention piece though. And we find that that is really where it works. It's a great question.
Yes, and to add to that, I would just say, we feel there are many more effective credit attributes that can generate a consumer response rather than just the trigger itself, if it's beyond retention for your own portfolio. I see another question here. Can you block triggers from being sold against our credit pools? Well, no, you actually cannot. Xactus and the other credit reporting agencies can't prevent the use of consumer information that's created from a credit pool. Those are sold at the bureau level, and each bureau does sell that information. However, the consumer can request to opt out of the resale of that information with the bureaus. They can contact the opt-out information, and it typically takes about 5 days for that to get in process. I see one more question here. Who can I contact regarding these products? Well, if you're already a Xactus client, please just contact your existing Xactus account executive. But if you're not a client or unsure who your representative is, just contact Xactus sales support at salessupport@xactus.com.
We have a quiet bunch here. Any other questions? We have 30 minutes left in our webinar. We'd love to field some questions if anybody has. All questions are good questions, by the way.
I see one here. Could I get a copy of this presentation? Yes, again, if you just email Xactus sales support at xactus.com. We'll be happy to distribute that to you and follow up with you individually. All right, well, given that, that will conclude our presentation for today. We sincerely appreciate being able to.
Question.
Oh, I see something coming in here. I'm sorry, Cam.
Safe to assume this is an enterprise. Greg G is asking, is it safe to assume this is an enterprise offering only, not for a team or branch? That's a great question. So if you're talking about Greg is asking if this is an enterprise offering only, is this a branch initiative or a corporate level initiative? If you're speaking about the monitoring, Greg, we see that coming in a lot of different iterations. There are many corporate entities that will give us a corporate input file, and of course we can monitor their entire file. But we also we work with a lot of branches and community credit unions that will segment specific segments of their of their overall customer portfolio, and it could be branch specific. So it's a great question. It's not limited, and to our point earlier, it's highly flexible. So if you have a specific input file you want us to monitor, again, we'll do that 30-day look back for you and give you a sense of how many people are coming through, whether it's at the branch, whether it's at the corporate level, and in many cases. And this is a great question. We do have clients who are engaged in other lead programs. So in addition to having us monitor for them their existing customer portfolio, if they've got like loans in flight and they want us to track that to make sure that they're not going to lose that that prospect to another lender, we can monitor that as well. Great question. Would love to meet you, Greg, and talk to you and do a deeper dive. Absolutely. Great question. Thank you. Any other questions?
Hey, Jack, I see that Wendell in the chat had said, so I'll be able to buy trigger leads from Zactus.
Great. Jane, I'll take that one. So
Yeah, go ahead.
Wendell's asking, can you buy trigger leads from Zactus? So Wendell, we do have access to mortgage inquiry alerts from all 3 credit bureaus. And today we can serve them to you. And the way we serve them is in a retention environment only. So in the case of buying trigger leads, you would want to give us a copy of your portfolio or your input file or a list of people you want to keep an eye on. And when those folks trigger, we can pass the trigger back to you. Okay. And just to clear up what the difference is between that retention trigger and what a prospect trigger is, what we won't do is, if you're licensed in the state of Florida, as an example, and you're a mortgage broker and you sell those loans off and you're really not maintaining a portfolio, and you say, hey, I just want to buy everybody that's triggering for a mortgage product in Orlando and Tampa and West Palm Beach, can you just give me everybody that's triggering in those markets? We won't sell those to you. A great question, though.
All right. Well, based on no additional questions, I believe we'll conclude the presentation. We sincerely appreciate everyone's time today. Very glad you took the time to join us, and we hope we can be of assistance to you in future.
Download the Dave app from the App Store right now. That's DAVE. Sign up for an extra cash.
I see Jim Suarez has a question. I see his hand raised. Are you able to type that in, Jim, or? Oh, his hand is down now, so. Well, again, if anyone has additional questions as you think through this, please contact salessupport@zactus.com and we'll be certain to assist you.
I
Oh, here's
see
Jim's
Jim-
question, sorry. What do you recommend for new people? Jim, I think you mean like if you're a new loan officer within a company trying to build your business, we really feel pre-screened credit leads are your best avenue on that. And we can definitely help you build an appropriate audience for your particular loan campaign and target consumers within your specific territory who are going to be strong responders based on their credit information. Okay.
We have a few more minutes. If there are any other questions, we'll be glad to answer them. Any other questions out there from our participants?
Jim's asking how we can get the pre-screen leads started. Jim will just email us at salessupport@zactus.com and we'll give you a follow-up package to get the proper compliance pieces in place and start reviewing criteria for you for a pre-screen lead program.
And by the way, that's a great question, Jim. And I think what's important to note here is, you're welcome. What's important to note here is when you're working with credit data, there's a lot of compliance. We touched on it earlier, right? It's important to know that Jane and I and Zactus are going to oversee all of that compliance. So you can go to market with confidence. We're going to have to step you through not only onboarding with Zactus, but we're going to onboard you with the credit bureau. They're going to initiate subcodes, and we're going to have to dot our I's and cross our T's and make sure that your direct mail piece is compliant with the FCRA guidelines, that you've extended the proper firm offer of credit, your opt-out disclosures. There's a lot to it, and that's what Jane and I we feel very passionate about ensuring that we're giving you the right data strategy and that you go into market with the proper compliance. When you're onboarding with the credit bureaus, and this is for all to hear, it's a great process, but it can be a lengthy process. It could take upwards of 4 to 5 weeks to just get one subcode from the credit bureaus. So think about what you're going to be doing in the fall. When everybody goes back to school and fall rush kicks off, any work that you're considering today, let's say you would like to proceed with doing some marketing and leveraging pre-screen data or leveraging triggers for retention, there could be upwards of a 4 to 6 week lead time. So here we are in the middle of July and everybody's boiling across the nation. But by the time we get those subcodes and your collateral is completed, technically you're not going to market till after Labor Day because it could be a 6 week wait. So whatever work you do, what we're doing and what we're trying to really convey to our clients is there's quite a bit of planning that needs to happen. And that's where Jane and I, this is what we're passionate about. We want to see you guys succeed. So we'll be glad to have like one-on-one sessions with you after this this webinar. But it does take a lot of planning and understanding, and that's kind of what it's our pleasure to help you guys get you to where you need to be. So if you do want to get set up, again, to Jane's point, you sign a quick addendum, doesn't bind you to any agreements, any other agreements with us. It just allows us to take some next steps to onboard with the credit bureaus. And then Jane and I go to work fastidiously to make sure that everything is in line to get you the data and the strategy to go to market properly. And we put our contact data up. I believe we're going to, Andres, do we have our contact data for?
So what I'll do is I'll send everyone the recording of the session, I'll make sure to
Great.
send your contact info there so they can reach out to you.
Okay, great. Thank you, Andres.
Well, again, we really appreciate everyone's time today and your participation. We hope we've given you some ideas to think about as these new market challenges keep arising. And I think we can really get you on board to get some wins ahead for your team. Thanks so much for joining.
I just wanted to say thank you everyone for joining again, like Jane said, and thanks again to our partners at Xactus. Most importantly, thank you, Jane and Jack, for this awesome presentation. Like I see in the chat, time well spent. And then, like I said to everyone, I will be sending you the recording of the session and the email for the contact information for Jane and Jack and their sales support email. So if you want to reach out to them or if you want to send me an email, I can put you in contact with them, whatever works best for you. So have a nice day, everyone. Thanks again. Bye-bye.
Okay, thank you, everybody.
Thank you.